I'd like to highlight it with you again because I see the steps in liquidating a partnership to be consistent, predictable. One of the things I proposed to you in Monday's lecture was that we divide up the property by giving one partner the accounts receivable and another partner the inventory, and another partner some prepaid insurance and the other partner some supplies, and giving one partner the land and the other partner the building. Well, at some point I want you to realize this is a hard task to accomplish, especially if you do the land and building thing. You are still partners and you don't want to be partners anymore. So the better way to do this, instead of trying to distribute property and have it come out even, is to convert all the property to cash. We call that process realization. And it's not just a partnership word, and it's not just an accounting word, it's a business, it's a real life word. Converting assets from their present state into cash is called realization. The second step, in that first step, some things we sell we might gain, and when we sell some other things we might lose. So in that process of gaining and losing, we would probably sum all that, get to the net position of all that, and distribute that gain and loss in the same way we've distributed profit and loss since the beginning of this partnership, according to their agreement. Now, we pay the creditors. Creditors' claims come first. We pay the creditors, and with the remaining cash, pay the owners. I'd like to point out to you these two words, distribute and distribute. Sometimes we distribute gain and loss, sometimes we distribute cash. I'd like to point out to you these two words according to their agreement and according to their claims. And I could probably get you to say, talk the talk, say the right response on cue. But I contend that there's a good chance that this is all nonsense until you see it walked out. And that's why we're going to do the handout we're about to do. I want to show you the significance of distributing profit and loss according to an agreement, or the significance of distributing cash according to their claims with the handout you have in front of you. Would you read with me? O, R, and U are partners who share profits and losses 2 to 1 to 2. A summary of the balances of the accounts in the general ledger at the time they decide to liquidate their partnership is as follows. The operative word in that sentence seems to be summary. I'm looking for 3 volunteers. Name me something different about the trial balance you are looking upon that's different from the trial balance you experienced first semester. Name me one thing, David.
There are 3 capital accounts.
There are 3 capital accounts instead of
1.
First semester we were a proprietorship, and now we're a partnership, and this particular partnership has 3 partners. Good. New volunteer. What's different?
We combined all the non-cash assets into one category.
We never called it this before, did we? We said accounts receivable, inventory, prepaid insurance, all those other names, equipment, accumulated depreciation. And we've lumped all those together in one and called it non-cash assets just for illustration purposes. We're going to use that vocabulary in this problem, but it would be inappropriate to use this vocabulary in a homework problem or real life if they didn't call it that. Right? Right? In your homework problems, if they have real account names, then you use real account names. Don't lump them together. Don't take that liberty. Do it like the problem expects. What else do you see that's different from this trial balance than one you saw first semester? The liabilities are all lumped together. We had accounts receivable, accounts payable, notes payable, interest payable, taxes payable, unearned rent as names of accounts. And we lumped them all together and called them liabilities. This one's shorter. This is a little summary trial balance because of non-cash assets and because of our lumping all the liabilities together. Let's read on. Instructions. make the entries necessary to liquidate their partnership in terms of the accounting equation and as general journal entries, assuming the non-cash assets are sold for, everybody said? $70,600. Now, I love first semester starting out with the accounting equation, and I kind of like second semester starting out with the accounting equation. It's an important foundation that we should never get away from. We should always be able to analyze transactions. And this particular one helps us to try to get all our thoughts together and do this in this format. If you look at your next page, it looks like the one on the screen. And what I did, and you should audit me on, is take the trial balance information and write it on that second sheet of paper. You ought to compare the numbers. Glance, 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 and see that I did it correctly. What if your homework problem for next time gives you a trial balance and a piece of paper like this, but it doesn't have the numbers? Would you know how to transfer them over there? And what if it did? What if you did? What would the very next step be? Before we consider anything, what should we do right this moment? We need to see, who said this? Was it you? We need to make sure we're in balance. We need to find the equal sign and add the things on the left side of the equal sign and add the things on the right side of the equal sign and make sure we're in balance. Why wait and get to the bottom of this thing and be out of balance and have no clue where the mistake is when you started out with a mistake? Absolutely make sure you're in balance before you proceed. Now, I've used this a few times and I've had students literally get their calculators out and prove it. You're going to have to trust me today and them that it's in balance, okay? But if you were doing one, you'd certainly want to make sure it's in balance. The steps in liquidating a partnership seem to be the same. You heard them in Monday's lecture. You heard them recap today. Who's willing to say the first step to me? Ooh, you're killing me. Somebody knows the first step. What's the first step in liquidating a partnership? Frank, is your hand up?
Yes.
Go.
Converting non-cash assets to cash.
Well said. Thank you. Good. Excellent. I can name that tune with one note. I mean, I can say what you said with one word. Can you? What is the name of convert non-cash assets to cash? Isn't it funny, Frankie, that none of them had volunteered? But now that I've got you backed in the corner, there are 5 hands up over here in my peripheral vision. None of them were willing to take the risk you took. But all of a sudden, they know the right answer, they think. Mark?
Realization?
Yeah, and if you just said realization first, I'd have shopped around. Oh, it didn't matter what you said. I was going to do the opposite anyway, okay? We're going to say realization. But what good is it to do to say realization if you don't know what realization means? Converting the non-cash assets to cash is realization, and that's the first step. When we realize these assets, what amount of cash came in? You know, you've said this to me before. Say it again. Say it. How much cash did we get?
70,000.
There's a number in this problem. I'm not asking you to make it up. We've got facts in this problem. Say it.
70,600.
Whew. You're making me sweat. I got $70,600 in cash. Now, I don't know what you remember about the accounting equation. Your question is?
Are we allowed to run this?
That's yours to keep. Do whatever you want to with it. Do y'all remember that in chapter 1 when we did the accounting equation, we learned that, look up, every transaction had 2 effects on the accounting equation that kept the accounting equation in balance? So I've got one effect. Assets went up. I need something else that happened here. What else are we going to do to keep the equation in balance? I need a volunteer. What happened?
Increase owner's equity.
Increase assets, increase owner's equity. Why?
Because
when the owner invested in the business, that was true. When we rendered services to a customer, that was true. What happened in this case? Increased assets. David?
Decrease the non-cash asset.
Decrease assets. like this. Does this work?
Yes.
Increase the asset cash by $70,600. Decrease the non-cash assets. How much, David?
70,600.
Now, I can think of two possible reasons that that's true. And I'm already starting to think multiple choice here. It seems to me that the first possibility would be we reduce non-cash assets by $70,600 because that's what we sold them for. Or maybe the second choice is we reduce non-cash assets by $70,600 because we sold them all. Or maybe it's both those things together. Maybe it's C, both. Or maybe it's D, none of the above. I don't want to just do this for you and not have you engage your brain a little bit to figure out why. Question. Think. Why are we reducing non-cash assets by $70,600? Is it one of these?
Yes,
Which one is it? Which one is it?
because that's how much we sold it for.
We sold it for $70,600. That was letter A, I think. What's your opinion? We sold it for, or we're reducing non-cash assets by $70,600 because C, both. Maybe. I need somebody to pick the other one.
What was B?
B was, we sold them all.
Okay.
We sold them for $70,600. We sold them all, both, neither, some other answer, fill in the blank. I'm just making stuff up. Trying to entice you to participate. Which is it? Your opinion is?
A.
A.
Interesting. Well, I'm not going to tell you the answer. I'm going to tease you a little bit with it and tell you that I'm going to tell you the answer before we leave the room today. Okay? So in my imagination, I'm putting a giant star in the air between you and me. And in a minute, we're going to see if that star reappears when the explanation for this comes. I'm not going to tell you right now. But I'm going to tell you that now we need to bring down all the balances. And one of the bad habits you never got over in chapter 1 was bringing down all the balances. You seem to just want to bring down the balances for the ones that changed. I'm saying we need to bring them all down. Let's do 8,100 plus 70,600. I got 78,700. Don't take my word for stuff. Use your brain.
That's right.
I'm looking in the non-cash column and I had 70,600. I reduced it by 70,600. Now I'm down to 0. And that's my cue to say to you, that's our objective. We're trying to reduce every column to 0. When we can get every column to be 0, we're out of business. That's what we're trying to do. Now, liabilities are still 27.5, and partners have capital account balances of 23.3, 12.1, and 15.8, all credit balances, all normal, and a class that's with me. True or false?
Sure.
What are the steps in liquidating a partnership? The first step is, everybody said, realization. The second step is one volunteer handout. Say it.
Distribute any gain or loss to partners according to their agreement.
I'll take blame for that incorrect answer because that was part of step 1. So let me see if I can clear this up. I made a mistake. I led you to the wrong answer. Let's talk about step 1 is realization. Hey class, when we sold $70,600 of assets for $70,600, how'd we do?
Pretty good.
Gain or loss?
Neither.
We just broke even, right?
Right.
No gain or loss. So on purpose, I made up the simplest example I could, the least complications, to try to get you into this gradually, and we're going to complicate it a little more as we go along. So if you look in your lecture notes, there are 3 steps. The first step is realization, which includes the allocation of any gain or loss, and we had none. I'm looking for the real second reason. You want back on the hook?
I'm on there.
Go.
Pay to creditors.
Pay the creditors. How much do creditors want and deserve? Do I call you Charles?
Charles or Charlie, either one.
Charlie, which one do you want me to call you?
Charlie.
Charlie. How much do creditors want and deserve?
$27,500.
Let's give them that. Let's reduce cash by $27,500 and reduce liabilities by $27,500. Y'all could have done that without my help, couldn't you? Couldn't you?
Yes.
Let's bring down new balances. 78.7 minus 27.5 is 51.2. No non-cash assets. 27.5 minus 27.5 is 0. Hey, we're making some progress here. We've reduced another column total of 0. And partners with capital account balances of 23.3 credit normal, 12.1 credit normal, and 15.8 credit normal in a class that's with me. True or false? True. The steps in liquidating a partnership are: step 1, everybody said.
Realization.
Step 2, everybody said.
Pay the creditors.
Step 3, I need one volunteer hand up. One new volunteer. Here she is. Distribute the cash to the partners. Okay. Then let's see if we can work this out. I need your help. If you've got a calculator, get it out. If you want to borrow one of my calculators, I've got calculators to loan. Raise your hand if you want one. Here it comes. Cash. Who needs a calculator?
That worked.
It's my fault. Who needs a calculator? So, what I propose we do, how much cash do we have right this minute, class?
1,000.
51,500. How many partners are there?
200.
Oh, sorry. 51,200. How many partners are there?
3.
Let's divide 51.2 by 3. Who's got me that number fast? Come on, hand up. Let's go. Go, 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 go. Too long, too slow. 17,000.
66.
To infinity and beyond, isn't it?
Yeah. 0.66.
Let's round that to like that. Is that okay with everybody?
Yeah.
Okay. So here's what's happening. I've made up a little game that we're going to play right this minute. I entitled it Happy Sad. And we're not going to tell you what the rules are. I need you to participate, and I get upset with you if you don't participate. I'm just going to get mad at you if you don't participate. You got to try. And you got to be sensitive to what's going on in the room, and you got to learn from it, and maybe you'll get better as you go along. So what the object of the game is to describe the emotional condition of each of these partners upon receipt of said amount of money. Here we go. I ask the question, you describe their emotional condition, you say happy or sad. Ready? This partner gets $17,067, which would make this partner
Sad.
This partner gets $17,067, which makes him
Happy.
This partner gets $17,067 and would be
Sad.
Happy.
This is the most amazing thing that occurs to me. I can't tell you how many classes this same phenomena occurs. It's happened for years. It happened this morning. It happened in the room just this minute. You got this one right. You got this one right. And I'm thinking, whoo, this is a smart class I've got. And you got this one half and half. I don't understand how you know this and you know this and you don't know this. It's the same thing. But here's the crux of the issue. Was everybody happy?
No.
The right answer will make everybody happy. If everybody's not happy, it's not the right answer. I took you on a wild goose chase on purpose. This is not the truth. This was a scam. A trick. Wrong. Let's learn from it. How much cash is there? 51.2. Well, it seems I recall that they have a partnership agreement that suggested that they share 2 to 1 to 2. Do I remember that correctly?
Yes.
Well, let's do a fraction that would be descriptive of that. 2 plus 1 plus 2 is 5. So the fraction in each case is going to be fifths. Did y'all see how I did that? 2 to 1 to 2 means that these two partners get 2/5 each. This partner gets 1/5. Help me with the math. Do 1/5 of 51/2, please.
10,240.
10,240, I heard. I could use an auditor.
That's correct.
Thank you. I asked for 1 and I got 1. Who? I was hoping for more. What'd you get?
10,240.
I need an auditor.
That's right.
That's correct.
That's pathetic. But I'm going to let it go this time.
That's right.
I need you to participate. 10,240 is 1/5. Then it seems to me that 20,480 would be 2/5, and 20,480 would be 2/5. How's my math?
Pretty good.
Good? Yes? Let's play happy sad. So this partner, upon receipt of 20,480, would be happy or sad? Say something.
Happy.
Happy.
Say it again.
Happy.
This partner, upon receipt of 10,240, would be
Happy.
I'd be sad.
this partner, upon receipt of 20,480, would be
Happy.
Well, just for the record, the answers are sad, sad, and laughing all the way to the bank at their expense. But that's not the issue at all. The issue is, was everybody happy?
No.
Come on, speak up.
No.
Was everybody happy?
No.
Then it's not the right way to do it. And I have taken you on another wild goose chase. No wonder we don't finish the lessons on time. Have we learned anything from this?
That's not the way to do it.
Not to trust me? Is that what you concluded? Well, maybe I'm at bat and I've got 2 strikes. Maybe we need a pinch hitter about now. How about you suggesting something, Mark?
Would you pay
That's
back?
a question, Mark.
Okay, you would pay back all 3 of the people the money that they put in and then divide the remainder by 3.
No.
Or
But
by
that was
2-1-2.
2-1-2?
Divide the
2-1-2?
remainder by 2-1-2.
We already tried 2-1-2 and it didn't
No,
work.
just the remainder though.
No.
After paying.
No. Good idea. I liked it. It was wrong. Charlie?
Well, according to this, it says that you pay it according to their claims, which is evidenced by their capital balances.
Translate that for me.
Their capital balances are right there:
Say them.
23,300, 12,100, and 15,800, and those add up to the remaining cash
It does?
assets. And so you would,
Really?
Yes.
No. Is that a coincidence?
No.
It's something about, let me think. The accounting
An
equation has to
equation.
balance?
Right.
How clever. Pacioli. Is anybody with me right now? I have $51,200 in cash to distribute. Charlie, tell me one more time. The first partner gets,
23,300,
the second partner gets,
12,100,
the third partner gets.
15,800.
When the first partner gets 23.3, he'll be happy. When the second partner gets 12.1, he'll be happy. When the third partner gets 15.8, he'll be happy. Are you with me?
Yes.
On the sheet of paper in front of you, what we reviewed at the beginning of today that I said in Monday's lecture, it had 2 words, 2 sentences that started with distribute. Distribute gain and loss according to their agreement. Distribute cash according to their
Agreement.
claims. And you didn't understand the distinction. And I'm trying to show you. We tried distributing it according to their agreement, and it didn't work out. This is cash in dissolving the partnership. We're distributing that much cash, bringing down new totals. Every column's 0. We're out of business. If you've got a question, you ought to ask me quickly. Shelby.
Did it say somewhere that you're supposed to do it that way? Or how did we
Did
know
it
you're
say
supposed to do
somewhere?
that?
Probably in the book. But
Well,
I'm telling
I mean, is there,
in the problem, does it
Yeah.
say that? No, no. I'm trying to give you an example of the theory that I've presented about distributing gain and loss and distributing cash. So that's the way we do it. Those are the rules. Now I'm trying to show you an illustration of those words. Frankie?
So these people, do they just all break even? And there's all the
Well, we don't know what's happened in the past. Maybe they've been very well rewarded in the past. Maybe they've been very successful. This is just the one event of we're going out of business. This is not a picture of the lifetime of their business. You know, how did their capital account get to be 23.3?
Yeah.
It's because they invested something at the beginning. When we made closing entries, the third step in closing entries, we increased this. When we closed drawing to this, we decreased it, and then we did another year. You know, this guy might have invested $1,000 at the beginning. We don't know. This may be the cumulative effort of all that over those years. This is just the way it is at this moment. Okay? Yes, ma'am.
What if the cash realization was a net income or net loss? Would they get less? Or
You
more?
mean, what if this caused a loss?
Mhm.
Ah. Well, let's
Okay.
do letter B. You want to?
because we're doing something different.
Oh, wait. We're going to get there.
Okay.
I guess why didn't those work? I'm not getting it.
Because that's not the way you do it.
Okay.
If we had had a loss here, we would have distributed that loss that way according to their agreement. But what we're learning new here is that we distribute cash according to their claims. And we don't know what that means when it's just words on a piece of paper. This is attempting to illustrate that to you. It's not based on the 2 to 1 to 2. It's based on their capital account balances. Do you see where it says that in words in your notes? I'm trying to get you to see that in the implementation of that. This is the outcome of that.
So when you're not in that loss, you're just subtracting from the capital.
Well, I'm doing two different things.
Okay.
Here, I'm selling something, having a gain or loss. Here, I'm finally going out of business by giving them what's left in the business. If I give them their claim back, they don't have a claim anymore. How much should I give to them? I should give to them based on their capital account balances. That's their claim. That's their portion of this cash that remains.
So if there's a net income or net loss, then that's whenever we would have used that method.
That's correct. You distribute gain and loss according to their agreement. You distribute cash according to their claims. We'll get better at this if you'll let me go on. May I go on? Okay. That was the simplest. We're going to just change the facts just a bit. There's a B version of this. Oh, we got to make some journal entries. Excuse me. Now, the journal entries ought to be easy. We've done the hard part. Can you look at what we just did and write it down like journal entries? That's the question. Can you make me a journal entry with this vernacular for this step, realization? I need a volunteer. What's your name?
Micah?
Micah? Try. Let's hear it.
I don't know what the date is.
Don't worry about it.
All right, account title is realization.
No.
No?
Keep going.
That's not it.
We're going to debit something and we're going to credit something. I need some help. David?
Debit cash and credit non-cash assets.
That's the best we can come up with right now. That's what we're working with. Those are the account titles. Now, be with me. You can write and listen to me. Be with me.
We just ignore this stuff.
We're not there yet. We're on the very back. We're making the journal entries on that sheet right there. Based on this is what we did in letter A. You've done this. This is a picture of what you're looking at. Based on that inspiration, how can we make this journal entry? And the journal entry is debit cash, credit non-cash assets in this case. But let's real life this one. This would more likely be debit cash, credit accounts receivable. Debit cash, credit inventory. Debit cash, credit building. Debit cash, credit land. Are y'all with me or not?
Mm-hmm.
Getting rid of each asset that we have. And that may be the way it is in your homework. But even that one's an oversimplification. Come on, be with me one more example in the air here. If you sell the receivables, are they going to buy them at exactly that price? Probably not. How about this entry? Debit cash, debit loss on, loss on disposal of plant assets, credit accounts receivable. Debit cash, credit gain on disposal, credit land. Debit cash, credit gain on disposal, credit building. Debit cash, debit loss on something, credit prepaid insurance. Do you see what I'm trying to make up here? Sometimes gain, sometimes loss. Debit loss, credit gain, expense, revenue. Am I getting through to anybody here?
Mm-hmm.
And you kind of accumulate that with selling this off piecemeal. And then you gather up all that gain or loss and see what you came up with. Whichever one's larger, gain or loss, would then be distributed to the partners. How? How?
By investment.
According to their
Agreement.
Which might have been equally, which might have been 2 to 1 to 2, which might have been some other agreement that they made, whatever it was. Did anybody understand the example beyond this? Yes or no?
Yes.
Okay, here we go. We're trying to make journal entries based on our analysis. Our analysis a minute ago said pay the creditors, decrease assets, decrease liabilities. Now say that like a journal entry for me. I need a new volunteer. Everybody in this room ought to be able to do that.
We just debit cash and credit liability, or cash liability.
Which is it? Debit cash or credit cash?
Debit cash,
And do what to liabilities?
credit.
Are you trying to increase cash or decrease cash?
Oh, excuse me. I reversed it.
It's okay. That's why I'm here,
Yeah,
to help you out.
liability.
Make me an entry.
So, liabilities, debit, liabilities, and credit cash.
Thank you. Debit liabilities, credit cash. We decreased cash to credit it and decreased accounts payable, notes payable, interest payable, taxes payable. We'd have lots of checks to write here. This is just an illustration of the many checks that we would write to accomplish that. If you're with me right this minute, say yes.
Yes.
If you're not, ask me a question. Make me an entry for the third step, which was to pay the partners. I need a new volunteer and be fast. Go.
You would debit O capital,
She said, question mark? Go ahead, do it.
debit O capital for 23,300. Debit R capital for as well.
She
One.
said, comments.
And debit, you?
You?
Capital for 15,800.
No question mark at the end of that one?
No.
You finally made a
And
statement.
then credit cash for 51.
Way to go. Good. So what we did on this line in terms of the accounting equation looks like this in a journal entry, and I think you have to do this in your homework problem for next time. It may not be exactly like this, but it's going to be similar to this. If you're learning, you ought to have an easier time with your homework. May I go on?
No. Yes.
Why not?
Yes.
Are we ready? All right, let's do B. Find the instructions on the first sheet. Page 1. Find letter B. Make the necessary entries to liquidate the partnership, assuming non-cash assets are sold for B. Say the number. $20,600. The public found out we were trying to go out of business and they want our assets at a bargain price. We're talking about real life now. The steps in liquidating a partnership are essentially the same thing. Say the first step to me out loud right this minute. Go.
Realization.
Realization. What happens in realization? If you're willing to explain it to me by its effect on the accounting equation, raise your hand. I want to know I'm listening to you. Please.
You're taking the non-cash and you're making it to cash.
Yeah, tell me. Increase, decrease. Tell me what happens.
Decrease 70,000
Decrease 70 non-cash assets 70,600 and
and adding it to cash.
increase cash by how much?
70,600.
Is incorrect. Look again. We're doing B. Read B off the front
Oh,
sheet.
excuse me, 20,000.
We got $20,600. It's okay. It's okay to make mistakes in here, okay? $20,600 of cash came in. May I have your attention? Shall we reduce non-cash assets by $20,600? Because that's what we sold them for?
Yes.
Yes.
Or shall we reduce non-cash assets by $70,600 because we sold them all?
Well, you're gonna have.
Did I see a big star appear in my imagination just now?
Yeah.
Have we been here before today?
Yeah.
I believe we have. I believe this is deja vu. The big T's. Did we answer the question then? I think we had letters A, B, C, both. D, some other answer. It's not D. And I'll go on record as saying it's not C. Reduce non-cash assets by 70,006
No.
or 20,006.
20,000.
Let's vote. Let's do hands up. 70,006? 20,006? If you reduce non-cash assets by 20,600, what will the balance be on the next line? And my question of you is, isn't the objective to reduce all those balances to zero? And when are you going to sell the rest of these assets? The answer is you sold them all. It's $70,600. We will never be here again. We want to make that column be zero. It is $70,600. But wait, you say, I thought the accounting equation had to balance. It does. And it doesn't. So when we sold $70,600 worth of assets for $20,600, how did we do, class? Gain or loss?
Loss.
So don't you think now would be the appropriate time to distribute that loss to the partners?
Yes.
And what proportion should that be equally?
2-1-2.
Oh, 2 to 1 to 2, according to their agreement. Well, that's fifths. How about doing 1/5? I bet you can do that in your head. 50, 1/5 of 10 of 1/5 of 50,000 is 10,000. The middle partner gets a $10,000 portion of that loss. The second partner, the first partner gets 20,000. The third partner gets 20,000. Are you with me right this minute? Say yes.
Yes.
2 to 1 to 2. We have, in realization, received the cash, incurred a loss, and distributed that loss to the partners all at the same time. Now, in journal entries, that might happen at 2 different times. But we had one opportunity to do this, and we did it. Are you with me or not?
Yes.
Okay, here we go. Bring down new balances. 8,100 plus 20,600 is 28,700. And 70,600 minus 70,600 is 0. We have liabilities of 27,500. We have owners with capital account balances of 3,300 credit normal, 2,100 credit normal, and 4,200 debit abnormal? Exactly. That partner didn't have a sufficient capital account balance to absorb his share of the loss according to his agreement. And he's the problem now. That partner is causing the rest of the solution to this. First thing we need to do is pay the creditors. How much do creditors want and deserve?
$27,500.
$27,500 needs to be paid to them. Bring down new balances. 28,700 minus 27,500 is 1,200. 0 non-cash assets, 0 liabilities, and partners with capital account balances of 3,300 credit normal, 2,100 credit normal, and 4,200 debit abnormal. Still causing the problem. You see, the problem is these two partners deserve cash. This one does not. But a minute ago, there was just enough cash to go around and satisfy each of the partners. Now I have $1,200, but partners with claims greater than that on the $1,200 caused by this deficient partner. Is class over at 10 after?
Yes.
I'm going to dismiss you, but I'm going to stay and finish this. If you can stay, stay. If you need to go, go. Okay? If you need to go, there's a PowerPoint on that for this on the website. You can click through it and see it. It's got comments. I'd rather do it with you. I'll try to go fast. You try to listen fast, okay? So, the book's solution to this is to assume that the deficient partner pays all his deficiency. It reminds me of a Disney movie where the prince comes and everybody lives happily ever after. I think that we could approach this a little more real life-ish to say maybe this guy's not got the money at the moment, doesn't have the money at the moment, and we'd like to wait and be patient and give him an opportunity to pay. But there's no reason not to distribute this cash to these two partners. Let's figure out how. What I'm going to do in the next few minutes is skip this line where they're going to get the cash in order to determine how much they should share of his loss if the worst thing happens. Now, there's three possibilities here. That person could pay all of it. We hope that they do. This person could pay part of it. Or this person could pay none of it. So let's account for that as if this person pays none. If this person pays none, we need to allocate this to these two partners in their partnership sharing ratio. It used to be 2 to 1 to 2, but this guy's not participating. So now it's 2 to 1. Agree? 2 to 1 is thirds, not fifths. Got it? 2/3 of 4,200 belongs to this partner. 1/3 of 4,200 belongs to this partner. 2/3 of 4,200 is 2,800. You gonna trust my math? 1/3 of 4,200 is 1,400. Now, what we call these their desired balances. These are their present balances. These are their desired balances. The difference between their present balance and their desired balance is the amount of cash they're entitled to receive. Let's do that. So I've got $1,200 to distribute. I'm going to give this partner the difference between these two numbers. 3,300 minus 2,800 is $500. I'm going to give this partner the difference between these two numbers. The difference between 2,100 and 1,400 is $700 that this partner is entitled to receive. I found their desired balances and then worked backwards to get the amount of cash they receive. I have 1,200. This sum is 1,200. Just enough cash to go around. Now I'm ready for whatever happens in the future. If he pays it all, they get it. If he pays some, again, and that's what the problem says, by the way. The problem says he pays $2,700. If you look back on the front page, we receive part of his deficiency. We get $2,700. This is like chapter 1. Owner invested in the business. Cash goes up. Capital goes up. Owner invested in the business. His capital went up. He's still deficient, but he's not as deficient as he was. And we go through the same process that we did a minute ago.
So where did the 2,700 come?
In the book, in the handout, on the front page, it's an assumption.
Okay.
It says we received 2,700. It's a fact in the circumstances. So we have the 2,700, but we also have the same thing. We'd like to distribute the 2,700 to these two partners, but in order to find out how much, we're going to do their desired balances thing. Same thing we did a minute ago. In a 2 to 1 relationship, this partner would have to have a $1,000 balance. This partner would have to have a $500 balance. If the worst thing happened, he paid none. Then the difference between their present balance and their desired balance is the amount of cash they're entitled to receive. The difference between their present balance and their desired balance is the amount of cash they're entitled to receive. 18 plus 9 is 27. I had $2,700 to distribute. I gave it to the two partners. That's harder than you'll see in your homework. This may be the only time you see it. You should review it. Look at this again, make sure you understand it, let it get cold, come back to it, look at it again, make sure you understand it. If you've got questions, come see me. Have a nice day.